everyone. Welcome to MBH Online Accounting and Business Solutions. In this video, we are going to talk about Bookkeeping 1, Golden Rules of Accounting. But before we get to the main topic of this video, let's take a look at the outline and have a brief discussion about the topic. We begin with the roles of accounting and bookkeeping. Accounting plays a vital role in running a business. Its goal is to provide financial information to the business's stakeholders, including the management, investors, and creditors. And this financial information can be used to track and summarize the company's actions and reports the findings to management and other interested parties to help them make business decisions. As a part of the whole accounting process, bookkeeping involves the preparation of the financial information. Bookkeepers are in charge of supplying correct and up-to-date financial data about the company. A bookkeeper is also in charge of keeping track of financial transactions such as purchases, expenses, invoices, payments for a company, and sales income. Financial data will be entered into general ledgers, which will be utilized to create the financial statements such as the balance sheet and income statement. If a company has a sound accounting system, of course it's easier to maintain a complete and systematic business records as well as to prepare financial statements that can guide the users in making good business decisions. Similarly, with bookkeeping, you will have access to detailed recording of all the transactions made. You will have no trouble with government requirements because having complete records is in compliance with the law. There would also be an ease in planning because all the records are organized and easier to understand. With that being said, it's faster to make financial analysis such as budgeting and projections. You might also wonder who needs accounting and bookkeeping services. Well, we categorize them into two, the internal and external users. As the name suggests, internal users are those people inside the company who rely on financial information to make business decisions about the company, such as expansions or downsizing. Examples are owners, managers, and employees. And finally, the external users are those outside that have different interests in the company. Examples are investors on whether the company earns satisfactory income, creditors deciding if they should grant a loan, government as to if the company is law compliant, and the public may also be interested in the company's development. And that's it for the overview, and if you're ready to learn the golden rules of accounting, keep on watching!
Are you now ready to learn more about the golden rules of accounting? It's no secret that the world of accounting is run by credits and debits. The golden rules of accounting are implemented on all ledger accounts like assets, liabilities, incomes, gains, expenses, and losses which are involved in the business transactions. And according to the golden rules of accounting, the ledger accounts are classified into three types. So now let's dig deeper about these types of ledger accounts. The first one is the personal account, and all accounts related to persons, whether natural persons like individuals or artificial persons like companies, fall in this category. So our first golden rule is debit the receiver and credit the giver. So here is an example of transaction in the personal account. It is when a company bought a gift from a gift shop. So the entry will be debit purchase 500 and credit cash 500. In the case of a personal account, when a business receives something from another business or individual, the first business becomes the receiver, and the second business or individual from it, which it was received, becomes the giver. The next one will be the real account? Well, in real account, the closing balance is retained and carried forward at the end of the year. These carried forward amounts then become the opening balances for the next year. These accounts usually pertain to assets, liabilities, and equity. Our second golden rule is debit what comes in and credit what goes out. In a real account, if a business receives something of value, such as property or goods, it is presented in the books as debited, and if something of value goes out from the business, then it is represented in the books as credited. Here is an example of real account transaction. It is a furniture purchase worth 10,000 in cash. The entry is furniture debit 10,000 and credit cash 10,000. So last but not the least is the nominal account. And in nominal account, it is a type of account in which all accounting transactions are stored for one fiscal year. And this allows for resetting the balances to zero and starting afresh. Nominal accounts are usually related to revenues, expenses, gains, and losses. Our third golden rule is debit all expenses and losses, and we credit all the incomes and gains. So, if a business incurs a loss or expense, then the book's respective entry is represented as a debit, and if the business earns a profit or gains income by way of rendering services, then the entry in the book is represented as credit. An example below demonstrates this. When a business pays rent for the premises it holds and is an expense for the business, the entry will be debit rent 12,000 and credit cash 12,000. So for the conclusion, these three golden rules of accounting laid the foundation in which the accounting system is standing today. So these rules standardize the representation of financial transactions across the industry. Before you apply these rules, there are a couple of guidelines you must keep in mind, which are: always check to ascertain the type of accounts in the transactions, and check whether the transaction increases or decreases the value of the account. So here is a little guide for you to be more familiar about the types of accounts. In asset accounts, it increases debit, decreases credit. Liability accounts, it decreases debit and increases credit. Capital accounts, it decreases debit and increases credit. Revenue accounts, it also decreases debit and increases credit. Last, the expense account, which increase the debit and decrease the credit account. Here is also a summary of what we tackled about the golden rules. So keep your accounts up to date and accurate with these three golden rules of accounting. Thank you, and that will be all.